All right, Coach Glenn back here with you. I have got Rich on the call today. And Rich, how can we help you get unstuck in your business?
I had questions about refinancing and foreclosure auctions.
Okay, let's talk about refinancing first. So refinancing, give me some specifics.
I was waiting. I had to talk with Jeff Miller a couple of years ago, and he wanted me to get my apartments out of my name and into the LLC's name.
Okay.
Commercially.
Correct.
And I didn't see why that was important or why it mattered.
Okay. Would you like me to answer that?
Yes, please.
So what's going to be important is, well, let me ask you this. What are your goals as a real estate investor? Do you want to acquire more properties?
Yes.
Okay. And do you understand that the more properties you acquire in your own name, those will start to rack up on your personal credit? Do you know that?
Okay, yes.
And eventually banks will stop loaning to you because you have too many loans and you're too big of a risk for them. So they don't want to see that. So one of the big advantages of going through a commercial lender, and that's going to be what's called a portfolio lender you want to find in your hometown, is a portfolio lender does not typically report your loans on your personal credit because they're not in your personal credit. They're in the credit of the corporation. Now, you will personally guarantee them, but that personal guarantee will not show up on your credit. So it won't screw up your credit score. It won't bog you down, and it won't keep that credit score which if you have more and more properties, it will pack it down more and more because it looks like a big liability. It looks like you have millions of dollars in debt on your private credit. Even though it's for real estate, it's still going to be a mark against you. So that's number one. Any questions about that part?
No, that's what I guessed.
Does that make sense? Okay. Yeah. So that is the biggest thing. And commercial loans you also want to get out of your name for personal protection. And that's one of the biggest reasons you want to be there. Because do you have tenants now?
Yes.
Okay. And you're in New York State?
Correct.
So you are the ultimate responsibility. I could be your tenant. I could be a friend of the tenant. I don't even have to be a friend of the tenant. I could walk up on the property tomorrow, drunk, stoned, shoot somebody. But if I break my leg, I'm going to sue you. And I'm going to win in New York State because the property owner is the ultimate owner of that property. That's the ultimate responsibility in New York State. Unfortunately, it's just not a very landlord-friendly state. So that being said, they will come after you personally. If they come after you personally, that means everything you own is now up for grabs, including your personal residence, including your 401ks, including any investment that you have, including anything that your name is tied to that you've co-signed for your son or daughter's car. I mean, everything that you're tied to, they can now come after. Where if you have a property in a commercial, if you have a property through a commercial loan in your LLC instead of in your own name, then they can only go after what's in that LLC. So I'm going to advise you to always have your properties in an LLC. I'm also going to tell you this. If you're going to put multiple properties inside of an LLC, I want you to put each one of them in their own individual land trust. A land trust will give them differentiation from each other inside of one LLC. So they can only go after that land trust. So it's a little bit of a headache. A little bit of a cumbersome headache to do it, but you're fully protected. You can sleep at night knowing that someone's not going to take everything you've worked for because they stubbed their toe and now they claim that they've lost everything and they're going to say, well, let's give them $1 million because that's just what some lawyers do. There's a reason why those guys are big on the TV and they're in the billboards, right? They sue people to sue insurance companies, but insurance companies can also turn around and come right after you. Long answer, but good question. Does that make sense?
Where I'm confused is the properties are owned by an LLC.
They are currently now?
Yes, but the mortgage
you have protection.
is still in a private name.
Say again?
But the mortgages are still in my private name.
So did you originally buy the properties
in a private name?
In a private name, and then you quit claim deeded them over to the LLC?
Correct.
The bank does not know about that, do they?
No, they do not.
Correct. And they don't want them to know because if they do that, they could call that note due. So there's a due on sale clause, and in their mind, that's a sale to a different entity. So ideally, are you in a long-term fixed mortgage on those properties?
Yes.
Okay. Good rate?
7-ish.
Okay. So here's my recommendation. When rates start to drop, hopefully later this year, we see rates drop. If not in 20, eventually they're going to drop. When they drop, I would do a refinance, and at that time, put them into your LLC name. You will still have to personally guarantee them, but at that time, I would put that loan in that name. That way, you're fully protected on all angles, and it'll be off your personal credit.
Okay.
In the meantime, don't discuss it with your bank,
Okay.
because the only way they're going to find out is if you tell them.
Right.
So
That's like a subject too, right?
Yes, essentially it's the same thing.
The due on clause.
Yes, the due on sale clause is the due on sale clause in a mortgage from any lender, any reputable lender, says if the name of the owner of this property changes hands without my written permission, we have the right to call it due. Now, as long as you're making the payments and they know that you own the LLC and that you were the guy, you just, I'd much rather ask for forgiveness than permission, you're probably going to be okay. I wouldn't be too afraid of it because it's all still you. And you could always just transfer back to your name if you had to, if the bank made you do it. But ideally, they probably would. I just wouldn't go poking around asking questions now. I wouldn't worry about that until it came time. Again, if you told me you had a 4% mortgage, it might be worth having a conversation. But if you're at 7%, I wait till you get down the 5-6 range again. It'll save you money. You can pull some cash out maybe. And then at that time, put it in the LLC.
Okay, so that's what we're looking to do next.
Great. Okay. Super.
And
so go ahead.
I keep putting that off because one flip leads to the other, and I maxed out my credit cards to start all this stuff.
Got it.
My credit, there's no late payments or nothing, but there's what do you call it? High utilization.
Your debt to income ratio. Yeah, your utilization is high. Okay.
Right.
And what are you concerned about with that?
So my credit scores dropped to like 670, 668.
Are you worried about not being able to refinance your property because of that?
Yeah. Yes.
No, I think you'll be fine. I mean, listen, I'm not a bank. I certainly don't know, but I will tell you this. I think that you're going to find that because it is real estate debt and because probably you can do how long have you had the properties for?
Oh, I don't know. 20 years.
Oh, when's the last time you did a loan on them?
I did a loan on one of them, like 05 or something. I don't know.
So my point is,
they got about 50% equity.
Oh, you're fine because a bank will allow you to put
on all my personal stuff. You needed, like I used to have 804, and they would just give you whatever.
Yeah.
But now I'm at 6 something. I thought 720 was the minimum or something.
No, if you want to get FHA stuff or that kind of, no, you'll be fine. So number one, I want you to build a relationship with a local portfolio lender. I'm not sure who you're talking to for mortgages, but get a local portfolio lender. Are you in upstate New York?
Yes.
So I wouldn't recommend Sun Market anymore, but it's certainly an option you could do. I wouldn't recommend that anymore. But what I would do, I would highly recommend looking at like a Pioneer Bank, Capcom might be a good one to talk to. And I would talk to these local credit unions, locally owned, not Bank of America, not these giant, ginormous banks. I would talk to a local portfolio lender. What all that means, Rich, is that the bank doesn't sell their loans to other outside banks or investors. They keep the loans in-house that they make locally for local real estate investors, right? So if they keep it in, they have a lot more flexibility on what they can write on. And you can also do, if that doesn't work, you can always get a DSCR loan. A DSCR loan, you can have a low 600 credit score, do a DSCR loan, debt service coverage ratio loan, and that you don't have to show any income for. All you have to have is a credit score above like 610, something like that. And you can do a DSCR loan and do a cash out refi. You're going to pay about a point higher mortgage on that usually, but they don't do an income check. So that's a great way to get it done as well, that you might be able to get. So anytime a piece of property with that much equity, you could be able to structure in there, Rich, listen, I have XYZ dollars I'm going to pay off as soon as I get that money. Matter of fact, let's pay it off at the closing table. Good. Right. Bang, 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 bang.
Right.
Done.
Right.
So that you have a lot of options. When you have equity in a property, you have a lot of options. So I wouldn't sell you. It sounds to me like you're sort of selling yourself short, saying I can't get it done without even really trying yet.
Well, I keep thinking the next flip, I'll pay that off. But then another deal comes up and I buy another flip.
Sure. And it sounds like one of the problems you're having is a cash flow problem during flipping.
Right.
And that's not uncommon. A lot of people have cash flow problems while they're flipping houses, especially when you start doing multiple deals at the same time. So you are not alone in that. And the best thing you can do, I would say, if even now, it might make sense. I think I just saw rates drop down to 6.25% for DSCR loans today. It might make sense to have a phone call with somebody local and say, what would you charge? What would my rate be? Here's my situation. Take your credit score right in. So listen, here's my credit score. Here's where I'm at. Here's my situation. Here's my properties. Do you want to do a cash out refi with me? And if not, we can put you in touch with some DSCR loans that are more national level. But I think I just saw one today that was 6.25 that came in. Pull your cash out. You can always refinance it later if it drops to 5 or 4. I don't think we're going to see those crazy low rates ever again. But you can always do that. But you're not by any stretch of imagination out of the water. You just have to sort of look down the road and say, what are my cash needs going to be next week, next month, and then sort of try and plan with it now with the current equity that you have.
The LLCs for the apartments, we've done nothing with. We set them up for legal reasons through NCH, like that drunk guy you talked about breaking his leg.
Yep.
The flipping business, we've been working with NCH to build an 80 credit score, which we've done.
Great.
When does that kick in?
When do you want it to kick in?
Yesterday.
Well, so you have to go and try and use it, right? You have to start to try to use it to see because I'm not a credit expert when it comes to where you should use business credit, but you should try to start using it wherever that might be, whether it be Home Depot, whether it be getting lines of credit someplace, whether it be.
Yeah, we're doing that small stuff.
Yeah, well, you may want to try and up it.
That's what I got to do.
I'm flipping multiple houses. So it sounds like what I'm hearing in multiple scenarios right now is that you're telling yourself something's not going to work and you haven't actually tried it.
That's true.
Well, knock that shit off because that's not going to work for you, right? So, okay, knock it off. So you don't want to do that because if you keep telling yourself, you'll never actually do the thing. And once you start doing the thing, you'll start realizing, okay, here's a roadblock. Oh, this is not a roadblock. Oh, I can go here. I can go there. And you'll start to get hope. And once you have hope, now things will start to come together for you. You're a smart guy. You're buying houses. You're buying rentals. You're flipping houses. Now it's just a matter of don't tell yourself something's not going to work. And if you're saying to yourself, well, I'm embarrassed going to the bank, who cares? They're in the business of loaning money. They want to give you money. You just have to say, here's why you can give it to me. And go in with your ducks in a row.
Okay.
All right. Good. I see a little confidence shift in you right there. I like that.
Always being on the personal side, you needed at least 720, I thought. So
no. Real estate, listen, if they have a hard asset to loan against, you can go pretty low. And especially when you have that much equity, because they're protected. They know if you default, they're going to take the bill. They don't want to, but they can. So you're not going in asking for a line of credit for $500,000 on a signature. You're going in and saying, look, I got a piece of property here. I want to borrow XYZ dollars against it. How much cash out refi can I do? What can I do on this property? I'm a real estate investor. Here's what I'm doing. Away you go. And you may have to try multiple lenders, and that's okay. Get all those little local credit unions up there and banks and start having conversations. When you find one that rolls with you, I can tell you from experience, it's a great experience. They help you. They go out of their way to help you and make things work for you. Hey, you got a loan. I'm a little tight in the numbers here. Yeah, we'll fudge this over here and do this over here. Yeah, we're good to go. You've been a great payer. We got you. Yeah. So all good. Stop telling yourself stuff's not going to work. Start going out there and just do it.
Can I switch to the flipping side? Let's
switch to the foreclosures. Yeah.
20 years ago, I did a little bit of this from some stupid book I read, and it was, elbow to elbow at these auctions. In New York, they got suspended all through COVID, and now they were dumping for a while, and I'm the only one there, and it was wonderful. And because of that, I didn't incorporate a lot of what you taught.
You did or did not?
I did not, because I had more than I could handle from these auctions.
Okay.
It just got lucky, and I did 12 last year, but I also didn't follow I'm coachable now. Apparently I wasn't then. I apologize. You can forgive me.
We're all stubborn in our own way, Rich. I get it.
Turns out you're a little smarter than I thought. So
what a compliment, I think.
So
go ahead.
I got a construction background, so I thought I was smarter, making more money, doing my own, and it about killed me. My health is failing in different ways. I'm too old for this shit, and getting other contractors is a real problem.
Yep.
At the foreclosure auctions where I've been buying, we have to close in 30 days. So the Pete Prospers of the world usually can't do that. Okay. So I did find some private investors, which I'd never dreamed of. Like you said, they're right around you, but
Yep.
they're all minded like me. So they get 50% of my profit when I'm done, and I
Oh,
do
wow.
all the work.
That's a big one. Okay.
So, yeah. So on those 12, I gave one guy multiple six figures, and he never even went to a single property.
Wow.
Yeah. So,
You were good for him.
he loves me. And
Yeah, I bet. So what's the question?
the question is, how do I get out of this cycle where right now, and here's the bigger question. Right now, that is drying up. There's all these guys from Albany coming down, and they know what the bank's going to bid.
Yep.
I don't know how they know that. I
Yep.
go to every single auction. They only go to the ones where the bank's, dumping a property. They know that. And I asked him, and he lied to me.
Of course. He's
One of the
protecting
guys.
his own. So I'm not sure. The question is, how do you get out of the cycle of buying from auctions only? Or I'm not sure. I'm not sure of the question.
Yeah, that was working until 6 months ago, a year ago.
Okay. Yep. Time to redo your plan, right? You want to come out from a different direction. So what do you want to go? What's your goal?
Or how do you play with all these guys from Albany that are like, they'll give me so much to walk away, which I've been taking because they got bigger bank accounts than me.
How much are they giving you to walk away?
Oh, the highest was 2,000. Usually it's 500. I offered one guy from Albany 20,000 to walk away, and he wouldn't take it, and I bet him up 60,000.
So do you like that world?
No, I liked it better when it was just me.
Well, it's not anymore.
It's not.
So we can't live in our own heads and make our own decisions about our credit, and we also can't live in the past about the way things used to be, right?
Yeah.
We got to roll with the times. We got to make changes as needed. So you're going to have to decide where your lead flow is going to come from. You can either spend money in marketing, have the phone ring to you. You can do what I teach and build relationships so that people bring things to you. Would you like me to teach you that right now?
You've done it. I've gotten a couple that way.
Okay. Who's brought the deal to you?
A realtor that couldn't get it financed through a bank.
Realtor's great. So you have those relationships. So build more of those relationships. You could also go to someone like a cleanout company and start talking to them and say, look, I'm willing to give you $2,000 to bring me a deal that I close on.
Yep.
So that's another way you can do it, right? That's another way. The other way I teach right now is what the very first way we bought our 2 deals is going to a mail carrier, right? Going to a mail carrier and saying, listen, let me know about a house in your neighborhood before it ever hits anything. If you know anybody that's passed away, that's sick, that moved on, whatever it might be, let me know. That's how I bought my first 2 houses in Rotterdam. Excellent. Let me know what's going on, and they do. They'll let you know what's going on. So that's another way you can do it. Make sense?
Okay.
So I want you to start thinking outside the box. I left the auction game many years ago. We mostly did online auctions towards the end. That we did a lot of online auctions, and I'm not in that game right now because it got crazy. So I stepped out of it because it got to be everybody was bidding with emotions, and I was like, It's why I started to wholesale privates. I'm like, if you want to pay that much, I'm happy to wholesale to you. So if you want to pay that much, fine, go for it. So it's a hot market right now. But I would find other ways to have, just keep expanding. If you don't want to spend money on marketing, expand your network of real estate agents. Tell them you have a triple commission strategy you want to give them. Say, I'm willing to let you keep the seller commission. I'm willing to have you relist the house when I'm done with it. So that's the second way to get paid. And I want to give you a $2,000 bonus for finding that property for me. That's 3 ways you can get paid, a triple commission. And by the way, if you bring the end buyer, I'm going to give you, I'll let you have that commission as well. So that's going to be 4 ways you can get paid on one deal. So when you think of a deal, you think of me. Because if you bring that deal to me, I'll take care of you. And you want your name to be the first name in their phone when a hot deal comes up. Make sense?
Yes.
Okay. That's what I want you to do. Keep it simple. Don't overthink it. And don't tell yourself it's not going to work. And don't tell yourself stuff from a year ago is going to work because it's not.
You're right.
And that's okay. The world changes and you have to adapt. As you adapt your market and adapt your strategy, you're smart to be here asking questions. A lot of people don't ask questions and they just fade off in never land. And then they just, well, I was going to figure it out, but I didn't. Well, you got to go ask somebody. That's what you did.
Right.
So smart move.
Thank you.
You got it. All right, brother. Well, listen, I will let you roll. Hope that was very helpful to you today.
It was very, very helpful. Thank you very much.
Awesome. All right, Rich. Go out there and kill him, man. We'll talk to you soon.
Thanks. Bye.
All right,